Dollar is down, US markets are up. What's going on?
I think dollar is down because there is a lot of talk, Nikunj, about the rate cut. And what was looking like maybe it will be a few months out, given some of the news articles that we are seeing, I think people are starting to take position in the Trump camp versus not the Trump camp. So I think there is a lot of that noise which is causing the dollar to come down, especially if the US interest rates come down. The assumption is that not as much money will flow into the US, and therefore the dollar is down. I think the markets are really enjoying a rally the world over. So I think Indian markets are doing well, US markets are doing well. So I think all good there, especially after the Iran-Israel conflict has been resolved pretty quickly.
Okay, hi Rajeev, morning. This is Snehi also joining in the conversation. We've seen some macro data trickling in from the US last evening. While the labor market looks good, you have all eyes that are going to be on the PCE index today, the Fed's preferred gauge of inflation, so to say. What are you expecting this number to be at, and how do you think this could affect US equities in the latter half of the trading day today?
Sure. I think what is clearly PCE is reflecting is that it is a little bit higher than what Fed wants it to be, or where they're comfortable. So clearly, some of the Fed governors coming and talking about how they see and what should be the next course of action, in my mind, is really a reflection of how the Fed governors themselves are positioning. Most of them seem to be saying, no, the labor market is good. There is no big rush for doing anything. So I would expect that really this PCE will be around the similar number, and it will not have any dramatic impact on the market. I think the market will move much more driven by what happens around the Fed governor, the Federal Reserve chairman, and what they end up doing there, which I don't think get resolved that quickly. So I think that is what will be the bigger move for the markets.
Hi Rajeev, morning. But help us understand that what sort of a sentiment are you picking up for the emerging markets, given the fact that the dollar is actually sinking, and for now it's boding well. But how sustainable are these moves when it comes to emerging market?
So I think what is very interesting in our mind is that dollar is something that the US government itself wanted to depreciate because that will allow the economy to pick up in the US, because we will not have as much imports. So imports will become expensive. Therefore, there will be more growth in the economy. And so I think they are able to do that without really indicating that that is what they want to do. Interestingly enough, that is good for markets like emerging markets, because a dollar strength hurts the returns of the emerging market. And so as the dollar weakens, one of the headwinds that we have been having, for example, in our fund, but in general for any emerging market investor, goes away, which is that the dollar appreciation makes your emerging market returns look lower. So I think that's a good thing for us, but it's also a good thing for the US economy, and as it turns out, for the emerging markets as well. So around the world, I think it's a good thing.
Okay, so that's the take on that. But Rajeev, help us understand the kind of momentum we are seeing in gold. Gold is now 5% away from its all-time high. Do you believe that there is over-optimism now in the equity market, or do you believe that this is well warranted?
I think the markets, the way they are reacting, what is very interesting is any crisis has been pretty much resolved in a few days. And so the markets are now pricing in that really there are no big risks on the horizon, and they are really assuming that things will be smooth sailing from here. So there is not too much of risk priced in at these prices in most of the markets. And I think that is a big concern. If something were to develop, then that is not really being accounted for. Most of the markets are pretty expensively valued. And so that is where the concern is. The offsetting bit, which you talked about, is the gold prices. So clearly gold has run up, and gold is an asset which goes up in times of crisis. So what is interesting is the markets are high and the gold is high, when ideally they are not as highly correlated.
All right, Rajeev, with this, we let you go on that. Thank you so much for taking the time out and speaking with us this morning. But with this, let's move on and let's connect with our experts then and try to understand that what's the construct of the market that they are